Hello, you're watching the business headlines on HW News with me, Ali Azhar. For anyone following the financial news or tracking the market even half-heartedly, they know what the fate of the country's fourth largest housing finance company, DHFL, has been over the last 10 months. If you insist on a recap, well, here it is. It all started with the liquidity crisis in September of 2018, when IL&FS defaulted, before which DHFL was hale and hearty and trading with a share price of 680 rupees per unit. A funding crunch followed, where banks became skeptical about lending to NBFCs, which, in DHFL's case, was aggravated by its commercial paper being sold at a discount by one mutual fund house. From then onwards, it's all been downhill. Defaults, downgrades, asset sales, allegations of fraud, talks about shutdown, and to top it all off, a recent declaration of its biggest ever quarterly loss last week, totaling 2,223 crore rupees. But naturally, all these events have taken a toll on its share price, which, from its peak a few months ago, has tumbled like a roller coaster at a theme park. Currently, it stands at close to 55 rupees per share levels, which equals a loss of more than 90%. The usual suspects such as banks, mutual funds, insurance companies, pension funds, and of course retail investors have lost money because of this dramatic fall in share price. However, someone who we probably didn't expect to be a part of this faltering stock and thereby consequently not be a part of the fall is none other than ace investor Rakesh Jhunjhunwala. Mr. Jhunjhunwala, or the Big Bull as he is often referred to, has lost close to 221 crores in terms of wealth erosion betting on DHFL. DHFL already formed a part of Mr. Jhunjhunwala's portfolio to begin with. He began accumulating more shares when the stock was crashing sometime during the July to September quarter of 2018, and by the end of September quarter, he owned a neat 3.19% shares in DHFL, which took his total number to 1 crore shares, according to exchange filings. Along with LIC, which holds 3.44% in the mortgage lender, Mr. Jhunjhunwala is the biggest public shareholder in DHFL, both owning in excess of 3% in the now beleaguered NBFC. As of September 28, 2018, which was the last trading day for the quarter, the price of Diwan housing was 275 rupees per share, taking the total value of Mr. Jhunjhunwala's stake to 275 crores on that day. Fast forward 9 months and 19 days later to present day, and we can see DHFL stock doddering at 54 rupees per share. A simple back of the envelope calculation will tell you that betting on DHFL has managed to leave the big bull of Dalal Street poorer by a whopping 221 crore rupees. And while this figure of 221 crores is not exactly his loss, because we aren't sure of his average acquisition cost, nor has he sold his holdings to book his loss. However, taking the two dates into consideration, the billionaire investor has seen his wealth erode substantially. What is surprising to see is that on the face of it, it seems like Mr. Jhunjhunwala seems to have indulged in what we call bottom fishing, which is a strategy of investing in assets that have experienced a decline. The fact that he purchased 13,34,000 shares when the price of DHFL stock was on the decline, as mentioned earlier, seems to suggest that he predicted its bottom and believed that it wouldn't go down any further. But of course, there's no concrete proof of it. Bottom fishing is a risky strategy and is considered speculative in nature and goes against the value investing strategy advocated by the likes of investors such as Warren Buffett and Benjamin Graham. So, the question to be asked is that could India's most famous investor not foresee that DHFL is headed for more trouble than just the initial bout that began in September? Why didn't he trim his holdings? In fact, what made him purchase even more stake in the beleaguered mortgage lender after IL&FS defaulted and triggered the liquidity crisis? Other reports in the past as well have pointed out blunders in his strategy and exposed a few chinks in the armory of this ace investor. And While Mr. Jhunjhunwala may be India's most famous investor, the title of the country's most savvy investor may just be up for grabs as yet. When Jet Airways was grounded on April 17th due to what we were told was a temporary crash crunch, it came as no big surprise because we were well aware that the entire aviation sector was railing and Jet specifically was not in the best of shape. The biggest clue came from the fact that they had not paid salary to their 20,000 plus employees for months on end. An SBI-led consortium got together in an attempt to rescue the airline and considered providing it with interim funding to help it get back on its feet. When that proposal didn't go through, they tried finding an investor for the beleaguered airline. That didn't go according to plan as well. Alright, we thought, the general elections are just around the corner. The Modi government cannot let such a massive airline with so many jobs at stake fail. Jet has to be rescued. It will fly again, we said. To everyone's surprise, nothing happened. Finally, on June 20th, the Mumbai bench of NCLT admitted Jet Airways for proceedings under the Insolvency and Bankruptcy Code. The NCLT instructed the resolution professional to complete the process in 90 days instead of the allotted 180 days, saying that the matter is of national importance. We were still hopeful of a quick resolution that would see Jet take to the skies again. However, hopes of a revival of the once king of the skies have been dashed, as on Thursday, the resolution professional revealed that he has received claims of a staggering 24,887 crore rupees against the airline from its creditors. This is a burden not many buyers would be willing to shoulder, and unless we can be proven wrong beyond logical means, we must probably reconcile with the fact that Jet Airways is headed for bankruptcy or liquidation. To break it down for you, of the total claims worth 24,887 crores received, the resolution professional has admitted claims worth 8,462 crores, which is about 1/3. It has rejected claims of 1,380 crores and 15,045 crores worth of claims are still under verification. Apart from financial creditors who have the first right to proceeds under a bankruptcy resolution, Jet Airways owes money to hundreds of vendors, travel agents, general sale agents, and most importantly, over 3,000 crore rupees to employees. An unexpected claim came from Jet Privilege, the frequent flyer loyalty program of Jet Airways, in which Jet owns 49.9% stake and the rest is owned by its strategic partner Etihad Airways. Jet Privilege has made a claim of 951 crore rupees as an operational creditor. Industry watchers don't expect creditors to get more than a fraction of what they have claimed. And as far as resolution process goes, the age-old adage comes to mind: pray for the best but prepare for the worst. A week after the Adani Group announced plans to enter the data center space with a 70,000 crore rupee investment, another billionaire-controlled group, albeit this time a Mumbai-based one, has announced its entry into the data center park space with a new business venture called Yotta. The data center storage space has been a triple-digit growth sector in the last 2 years and is expected to grow at the same pace for the next 5 years. And the Hiranandani Group is looking to capitalize on this opportunity as soon as possible. The group is looking to invest as much as 15,000 crores over the next 5 to 7 years in setting up data centers in Mumbai, Panvel and Chennai. The managing director of the real estate developer entity, Hiranandani, said, "The Digital India program is one of the key pillars of the Prime Minister's vision of India becoming a $5 trillion economy by 2025. We envision a huge opportunity with Data Localization and Protection Act to be announced soon, which will give a big impetus to the data storage business domestically." Mr. Hiranandani seemed to be wasting no time, and his first data center park will come up by December this year, which will be part of the Hiranandani Fortune City Township in Panvel. And it plans to invest around 1000 crores to build it. Thank you for watching HW News. This is me signing off. Have a great day.